Satyanarayana Chava, founder and CEO of Laurus Labs, joining us now on the show. Mr. Chava, a very good morning to you. And it's clearly a robust set of numbers. Profits are up massively. Your margins have grown. Is this a CDMO push that we're seeing? Where is this coming from?
If you look at the overall revenue increase came from CDMO significantly, and also the higher revenue came from formulations. The gross margins earlier we were giving guidance between 50 and 55. Because of increase in share from CDMO, now we are confident to achieve gross margins between 55 to 65. Okay. We always believe the quality of business is always visible from the gross margins. Our EBITDA numbers were lower in the previous quarters, not in the Q4. Q4 we did very well last time, in the previous years. We were doing a transition from generic to CDMO and attracting customers, getting projects, winning projects, and validation of those APIs is a time-consuming process. That's what we had in the last 2 years. At least now we can say we have seen some good traction. We completed validations. We started supplies of APIs for launch quantities or commercial. That's the main reason for our improved gross margin, as well as also there was a operational leverage also helping us. The equipment utilizations are getting better. We are not significantly investing in new areas right now, except ADCs and gene therapy. So our non-core CapEx and OpEx is coming down. That's the reason our EBITDA numbers are also.
Do you see the kind of jump in CDMO revenues to sustain, Mr. Chava? And yes, you've said the gross margins will expand, but in Q2 through this year, what is that trajectory that you're seeing?
I think we expect the traction will remain. As you have seen, from 500 crores CDMO revenue in 2021, we are at 500 crore revenue per quarter. We expect that traction will continue. Why we are confident that traction will continue? Our revenue contribution majority coming from late stage and commercial molecules. If we have to gain significant growth in CDMO revenue, if you have too many molecules or too much of revenue coming from preclinical phase 1, it is very difficult. We are in the phase 3 and commercial molecules. Work is going on from big pharma. So we are very confident of keeping this traction.
Chava, are you therefore telling the street that if you moved from 500 per quarter to 500 per year to 500 per quarter, and if you are currently therefore at 2,000 crores per year, you will move to 2,000 crores per quarter in the next 3 to 5 years?
No, we have to deliver now. At least now we are confident that we are done very well. And see, all depends on the projects. See, one thing you have to keep in mind, we are playing in the API space for NCEs, or advanced intermediate for NCE space. We are not in the building blocks or early stage intermediates. So the quantum of opportunities for us right now are very, very interesting.
Sure. One of the notes, Dr. Chava, of course, that was just in jest, Dr. Chava. So one of the questions that I have is that one of the notes said that Septiapterin sales, which were very strong for you in Q1, may not recur in Q2 and Q3 before a potential pickup in Q4. Or could this be on the button, and therefore, and is this something that could play out in Q2 and Q3 and therefore make Q2 and Q3 growth numbers look okay?
See, because of the confidentiality with our partners. We can't tell you when we will supply, how much we will supply, what price. But as I mentioned, we have good traction in CDMO, and we'll continue to grow in CDMO. That's what I can tell you very clearly.
Okay.
And see, it's very difficult to predict how much of each API we supply every month. So, but they have plan and they will give orders and we supply as per their plan. One good thing is, it's not like generic companies, they have 5 suppliers. Yeah.
No. I hear you, Dr. Chava. Dr. Chava, a few years back when we used to interact, you used to say that APIs will be a third, even though they will not grow, but APIs could stay a third because there will be some growth there, and the other business would be a third, one third. Now I'm trying to understand from where you are right now, over the course of the next 2 or 3 years, if CDMO is going to be the big building block, how do the percentages change for you as a company, and thereby does it have an overall impact on the gross margins and the consolidated margins for Laurus as a company, let's say in FY28?
See, if you look at the Q1, we were 59.4% gross margins. Whereas close to 1/3 revenue came from CDMO and 2/3 came from generics. Despite of the 2/3, 1/3 mix, we're able to do very well. That means we are running an efficient operations, even in the generic space. Otherwise, our gross margins will not be that. And going back to your question, we expect the gross margins will remain same, grow, because of higher contribution will come from CDMO. In the next 3-4 years, we expect CDMO revenues should grow bigger than what we have today, and we should inch towards 50% revenue contribution coming from CDMO in the medium to long term.
So, do you look at possibly listing the CDMO business separately at some point?
No.
Completely out of the question?
Yes. Yeah.
Okay. Tell us a bit about what Laurus Biosciences is doing in terms of innovation. And I'm asking because so many in the space, companies in the space are now looking at these breakthroughs that become huge payoffs and also, of course, breakthrough medication. Is there anything exciting happening there that you'd like to share? Or what is the focus on that bit? Because yes, CDMO very efficiently growing, but what's happening on the innovation front?
In the biospace, we have 3 segments: fermentation, precision fermentation, biocatalysis, and enzyme manufacturing. That's what Laurus Bio is. And they have good prospects. That is the reason we're expanding capacity at YoY, and we expect the capacity will come online by end of next year. The second segment in bio is cell and gene therapy. In cell therapy, we have investments made in subsidiary ImmunoAct. They're doing good. In gene therapy, we have licensed some patents from IIT Kanpur, and we are building a GMP facility at IIT. We also announced investment in antibody drug conjugates because company already makes payloads and linkers, and we wanted to do bioconjugation, purification, and purification. That is the second initiative. The third initiative is antibody drug conjugate. Second initiative is gene therapy and adenovirus vector management. So if you look at these 3, the bigger one which is going to mature faster is our precision fermentation, where we are investing significant money and also resources. The ImmunoAct, they have 1 product commercial, and second product is in clinical phase right now. Phase 1 is going on, so we can't give you more details at this stage. And in gene therapy and antibody drug conjugates, we are investing, and we are creating a 6,000 square meter GMP facility for gene therapy and antibody.
Okay. Dr. Chava, very quickly, out of time, but just one quick question. We learned that you committed to some 5,000, 6,000 crores of capex in Andhra Pradesh over the next 5-8 years. I was looking at your numbers. Cumulatively, the last 5 years, you've done 5,000 crores of capex. In AP alone, you're guiding to 5,800 crores. Are you doing more capex beyond that as well? What's the total capex number then?
We are at if you look at the last 3-4 years, we are between 800 and 1200 crore capex per year,
Right.
depending on the opportunity what we have. See, we have only 50 acres of land parcel left for our growth. See, developing any new land and getting approvals, getting ready for commercial supplies is a 3 years time frame. So we requested government and they gave GO yesterday for 530 acres of land, single land parcel. And there we committed to invest 5,600 crores and provide employment over 6,500 and in a phased manner in the next 6-7 years. So we expect to invest that much amount in the next 5-6 years.
Got it. Okay. Wish you all the best for that, Dr. Chava. Thank you so much for taking the time out and speaking to us. Really appreciate your time.